Good morning, everyone. Mark Avar here with a Rate Watch report. Take a look at the mortgage-backed security market, get a sense of where the interest rates are going. Well, good news here on the 16th of December. Probably an early birthday present for me because it's my birthday. In any event, look at the chart. The candlestick. It is going up, which is of course good news for interest rates. And let's before we look at these charts a little more, this is why the what would be driving rates down. The CPI, the Consumer Price Index, came out. The headline will say that it went up about 4%, but when you back out what the market looks at, the analysts, the people that know what they're talking about, look at is they look at the core rate, which is when you back out the volatile stuff like food and energy. And when you get the core rate, it's 0% inflation. Zero, nada, nothing, zilch, no inflation. So I think the Fed, and what's I think more encouraging about this, and again, this is not a fact, this is opinion here, this is opinion. Um, this has come out before the Fed speaks, so I think what you're going to see, hopefully what you'll see, is the Fed's going to continue to talk about the economy is improving, we're kind of getting out of this thing. So housing starts are up, building permits are up. Those are things that we would expect to be up when the economy is improving. But low rates are very key to get this economy moving, to continue to move. And I think you may be seeing some talk about maybe continuing to buy treasuries, continuing to buy mortgage-backed securities, making a pledge to keep rates low at any cost. But so, anyways, that's a good thing. So what we've seen here is a gap up. We've talked before. The market doesn't like gaps, and if you follow my line here, there's a big gap here. And so usually, if you don't close gaps, you sometimes will fall into another price range. That could be down, sometimes that could be up. But so and we saw a little bit of encouraging here, and I know this candlestick is kind of small, but if you'll notice, it started low. This candlestick started low during the day and crept back up during the course of the day, closed a little bit lower than its daily high, but nonetheless was in an upward movement, which is good news for rates during the course of the day. Now, let's take a look at what our lenders are reporting in. It is kind of a mixed bag of the 88 lenders that are reporting in so far. About 46 are having some negative 42, are having some negative comments towards towards rates, and about 46 are just the opposite. So, and if we look at our day watch, as you can see, the market open, went up right away, which is good news for rates, and then sideways a little bit, and then now creeping back up again. So that's relatively positive news on interest rates today. Now, as you look at this chart in a little more detail, up here, sometimes people say, well, okay, we see a little bit of improvement here, but what does that translate into rates? Does it mean the rates changed by half a point, a quarter, an eighth, whatever? Right around the Thanksgiving holiday, we were trading on the 4% coupon right around a 100.4. All right, and now we're down here at about 98. This actually translates into about a 5% or half a percent upward change in interest rates from dropping from here to here. So that kind of gives you hopefully a little bit of sense of little blips here and there. While that may mean a little, may mean a lot to bond traders, it translates into rates that we deal with. It's not dramatic. It's not dramatic, but it is significant. We're looking for trends here. But this fall down here represents a half a point percent increase. So while we do have this good news today relative to where the trend is, I still believe that these two lines here, this bottom line here, this top line here, kind of represents the trading range that we're in. We're not going to come back up here, but this represents the trading range that we're in. And what the news today is encouraging in the sense that it means we're probably at the bottom of this trading range, which means we could only go up, which of course translates on the mortgage-backed security market into lower rates. Have a good day, everyone. Hope you found this information helpful. Have a good day.